Stocks approach records, reversing last week's losses. High-yield bonds are also unstoppable as they hit all-time highs. We will also look at dollar as it could hit fresh lows after recent weak bounce. Precious metals are taking advantage of weakness of the dollar, and gold has hit an all-time high. Natural gas is at a crossroads. We'll see if it's related to war in Ukraine and Putin's dilemma. And Bitcoin rallies after it came very close to collapsing. And we'll also finish up with oil as it attempts to bottom in the price floor area as I have described it before. All this and more in today's edition of MasterChartsTrading.com for Friday the 13th, 2024. Please don't forget to hit the like button, subscribe to this channel, share this video. If you're a subscriber, stay tuned. We have quite a bit of stocks to cover, notably market breadths, treasury bonds, various ETFs, large cap stocks, quite a bit of speculative securities, as well as gold and silver related will be covered in the members only section. If you're not yet a subscriber, consider signing up by going to the link in the description at MasterChartsTrading.com. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow lines. We are currently looking at S&P 500 on a daily time frame. Daily meaning that each candlestick is 1 day's worth of activity. Each of these red and green funny looking things. So what I wanted you to take a look at is just how accurate my indicators work. And so notice this pullback that occurred from April 30th. Notice that we have pulled back until we exactly touched this green support resistance line. Tried to pierce it, we failed, moved over a few days. Again on September 11th, we tried to pierce this green support resistance line and rallied since that. So now we're very, very close to records. Records are simply, a few percentage points higher. But just very interesting to note again how the indicators, my indicators, are acting as quite good support and resistance areas, and how we can use them for trading. In this case, I didn't personally use this level for trading. However, we did use it in a sense of we were seeing if the support will hold, and indeed the support did hold here for at least for now, and we're very close to records. So if we make new records, I think we will see a melt up for stocks, because normally when people sell short, so let's just pretend that we sold short, we caught this very top, well, next to records. Let's say we sold short on August 30th, and where do we put our stop? We want to put our stop somewhere reasonable. We put our stop above the previous highs. So previous highs were just higher, few percentage points. So if we indeed make new records, we will need to cover our short. In other words, we need to buy and return the stock. So if we buy and return the stock at new records, that means that there's going to be more demand for stocks. And again, we'll be covering, many people who shorted will be covering their positions. And once they cover, it means they need to keep buying, and we're going to see more and more and more shorts, what's called squeezed out. So this is the essence of short squeeze, and this could continue for a while. So normally when we estimate the move, we can see that this dip from July 15th into August 5th was about 10% deep. So we can expect something similar to be duplicated on the upside. So it's about 540 points or so. If indeed we hit new records, most likely we'll just continue higher, not necessarily immediately, but maybe within weeks to few months. I think we will continue higher, and most likely we will hit this level of 6,200. Of course, unless something terrible happens, and I'm reading right now, and many analysts are seeing potential further escalation in the Ukraine-Russia war, in a sense of if United States and Britain and France allows Ukraine to use weapons that they provide to target targets within Russia proper, and quite deep, like 150-200 miles inside Russia, it would cross another red line for Putin, and at that point he might actually do something crazy. And he has been known to do crazy stuff, like, for example, nobody expected him to invade Ukraine in 2022, in February 2022, yet he did it, and right now he needs to basically save face. So if he has already announced that if Ukraine will start hitting targets inside Russia proper with United States, British and French weapons, it would imply that NATO is now fighting Russia. So an escalation further could be triggered, in a sense of NATO countries itself could come under attack from Russia. It's not impossible. He has been known to do crazy stuff. So definitely feels like we're approaching some sort of a climax, perhaps even, of this whole Russian-Ukraine war. And obviously, if war is indeed breaks out, most likely stock markets will be closed. So yes, we might break out to new records, but what if Putin decides to invade or attack targets in, let's say, NATO countries? It could be something very dramatic. So let's, cross my fingers that we will not see that type of thing, but we cannot exclude that. So just as an aside, and when we get to natural gas, I will also show we're at some sort of a crossroads. We're very close to some sort of a resolution. But looking at our stocks as of right now, without the crazy person in Kremlin, they look quite bullish. I was worried a little bit, back here in early September, 6th of September. If we broke below this level, then we could continue lower, but we held support exactly at the green line, and we are approaching new records. So for now, I have a pretty good feeling about the way stocks will behave, especially because of the way high yield bonds are behaving. So we're currently looking at high yield bonds, also known as junk debt. So once I wanted to show again that high yield bonds and stocks correlate highly to one another. So what does that mean? It just means that stocks, this is down below here, this yellow, you can see that it's mostly positive. So this means that high yield bonds, these are high yield bonds, correlate. They're doing about the same thing as stocks are doing most of the time. And indeed, we're at a very high degree of correlation currently. So high yield bonds hitting all-time highs before stocks did that. And notice that the high yield bonds, okay, so this is the corrective action that took place between 30th of August and 6th of September. It's absent on the high yield bonds chart. There's the 30th of August, there's the drop into 3rd of September, and then 6th of September we're already at new records. So this is telling me that we're seeing a bullish divergence. In other words, high yield bonds are hitting records before stocks are hitting records. So to me this looks quite good, and I will treat it at face value again for now. The way I'm seeing it, stocks most likely will break to new records as for the above mentioned reasons. So I think high yield bonds hitting records again is quite a good sign. Let's continue on. We're now currently looking at dollar currency index, DXY, on tradingview.com. Okay, so notice that dollar currency index have broken down below this red support resistance line, and it's currently in a downtrend. What does that mean? That means we need to look for selling opportunities for the dollar. Now, last week or a few days, I was looking at this candlestick on the 6th of September, and I thought that this was indeed the bottom, and I thought that we're going to continue to rally and get up to this red support resistance line. It didn't yet happen. In fact, so far we're finding resistance at this yellow support resistance line. So this is generally speaking, a weak resistance, and the red line is a strong resistance. So notice how weak the dollar is. It's not even being able to get up to the red support resistance line. So we'll see again where this goes, but the way gold has taken advantage of even this very slight weakness for the dollar is quite telling. So gold, just like high yield bonds, barely made any corrective action. And yesterday, 12th of September 2024, and today on 13th of September made fresh all-time highs. So currently gold is at $2,560 or so dollars. It has never been here, and the decision by the European Central Bank to cut interest rates and all the talk currently about Federal Reserve following suit basically shows that central banks are keen to weaken their currencies, and gold is taking advantage of that. Notice that gold is traded in this case in US dollars, so XAU divided by USD. Notice that USD is under pressure, it's getting smaller. So if the bottom part of this equation, XAU divided by USD, just got smaller, the top part pulled this currency pair higher. We're seeing normal relationship between gold and dollar. I like normal. Sometimes we're seeing abnormal relationship, but I think right now we're kind of back to where normal relationship is. So we are trading gold, we're trading silver, we're trading gold-related gold miners. So, for example, notice we have quite a bit of gold miners. I personally hold Royal Gold. So here's Royal Gold, my position. I bought back in June of this year. In a few days in July, early July, I moved my stop to entry, and I just kind of let it ride. We're currently at all-time highs as well for Royal Gold. So I just wanted to point out, for example, down below here, what a poor correlation looks like. So this is Royal Gold, poorly correlated to the S&P 500, because gold is a separate asset class, and for a good reason. Notice that there's barely any correlation to the S&P 500. But my position, but I just wanted to show you that we are indeed breaking to new records. So Royal Gold, this W type of pattern with a depth of 54%. Could it continue another 54% higher? I certainly hope so. I have a position open, so I'm gonna hold it for now. All right, so that's gold and dollar. Let's look at the crossroads for natural gas, as I was pointing out. So number one, I have here future November 1st, 2024. Where am I getting this from? So this is my indicators projected into the future, and notice that they're curving down into the November 1st. So that's the lowest point for this blue support resistance line. Above blue is bull market or uptrend. Below red is bear market or downtrend for commodities. For stocks, it's a little bit different. But for commodities, currently, notice that we're in a downtrend for the dollar. So the question is, do we want to sell it short right now? And actually, I want you to answer this question. Make a comment below. Would you sell short natural gas right now for a move towards 1.8? It's currently at 2.3. Or would you possibly buy it even right now, or do nothing for a move higher towards 2.6? So again, make a comment. So Russia is known for producing, oh, by the way, that Russia currently in its fascist state has nothing to do with the country I left from, which is good old USSR. I can't believe I'm saying this, but the USSR at least was sane. Now it's ruled by insane people. So current fascist Russia is big exporter of natural gas as well as oil, and I'll get to oil in a second. But natural gas, notice that if I am correct, and many of the other analysts are correct, or let me rephrase it, if many of the analysts who are predicting further escalation of the war in Ukraine, it would imply that Putin could be winning if natural gas continues higher. And I'm extrapolating here. So up bet would imply winning action for Russia. Down bet would imply winning action for Ukraine. Do you accept that argument? Make a comment. But let's just pretend for a second that yes, we indeed accept that argument. If natural gas continues to rally, then prices above the blue support resistance line. Currently, it's a little bit higher. Currently, it's around 2.8. But again, in November, which is actually very close to the election, natural gas will be in a bull market at a lower price. Okay, because notice the indicators are curved down. Currently, it's in a bear market, so the signal is to short it right now. Today we have a signal to sell it short. How do I know there's a signal to sell it short? You can see that we today closed again below this red support resistance line. So that's our signal. That was the same right there on July 12th, 11th. So do we sell it short? Do we do nothing? Do we wait until November, until we see lower prices, or rather not lower prices, but lower levels at which the bull market will establish itself? So difficult, very difficult decisions right now. When I'm faced with such difficult decisions, I just do nothing. So like, I'm not sure I want to trade natural gas right now because of the above mentioned reasons. Now also notice this natural gas action. So 2 times we held support on August 5th and on August 27th, exactly at the yellow line. Again, I'm not making it up. Right there and right there. Okay. And then also between 27th of August and 28th of August, we gapped up. Okay, so there was pretty good buying pressure here. So it's interesting, right? It's interesting that this is happening, and maybe there is a relationship to the war in Ukraine. Maybe it has to do with supply and demand. Maybe it has to do with just technical factors. I don't really know much about fundamental factors, but perhaps somebody can comment and say, are we seeing this demand increase or potential supply disruptions that are on the horizon? Supply disruptions could, of course, factor into the price of gas. And crazy as it sounds, there is still a functioning pipeline that is going through Ukraine from Russia. And during 2.5 years of war, gas is transiting through Ukraine from Russia into Europe, into, I believe, Slovenia and Hungary, if I'm not mistaken. So what is going on here? Are we about to see that pipelines shut down and prices go up for natural gas? Are we about to see something completely different, perhaps an escalation of war? Make a comment. Finally, or before we wrap up, I wanted to briefly touch on Bitcoin. So last few weeks I was discussing Bitcoin, Solana, and Ethereum. Ethereum completely collapsed. Solana was on the verge of a collapse. Bitcoin had a nice move to the downside, but actually sort of held its support here on 6th of September, because if it continued down towards this red line and closed below it, it would mean it's a down. It would be in a downtrend. So let me just show you what a downtrend in Bitcoin looks like, and you've seen it, you remember it. So this is a downtrending Bitcoin. Okay, so downward facing arrows, selling opportunities, lower lows and lower highs. Eventually we saw a breakout right there on 16th of February 2023. I don't really need to think, I just need to look at my lines. Okay, and then we see opportunities to buy at the blue line. Okay, very nice move. Right now it's sort of stalled, and we saw, I mean, technically speaking, again, we're still in an uptrend, upward facing arrows. We haven't yet closed below this red line, and on the 6th of September we came very close, and that's why I say it was on the verge of an abyss. But it rallied, and currently, as we speak, because it's a 24-hour security, it is attempting to break out. In fact, it's currently above the blue line. So let's see where it goes. We have 22 hours still left before a decision will be made. Perhaps I'll send an alert to my subscribers over the weekend, because Bitcoin again is traded 24/7. So Bitcoin and I guess other cryptos really came close to a collapse, but perhaps the worst is behind us. Perhaps the decision by the European Central Bank and possibly soon by the Federal Reserve to cut interest rates will be beneficial for cryptocurrencies. Alright, so that's all I wanted to say about Bitcoin. Let's very briefly look at crude oil, another major source of friction around the world. I just certainly hope one day, if I'm still alive, I will see a world without oil. We'll have some sort of a new energy source, maybe like fusion or something of that nature. And we don't need to worry about weird countries dictating their terms. Lots of various dictators around the world rely on oil exports to fuel their dictatorships. So crude oil is definitely one of those substances to which we're still addicted. However, currently it's in a downtrend. Notice downward facing arrows. This is quite a volatile security. You can see we had uptrends, downtrends. Not an easy thing to trade, to tell you the truth, but occasionally we get nice moves. So for example, last move was quite nice. We actually made new lows. So let's look at the weekly time frame for oil, and there's the weekly time frame for oil. So I highlighted this area with this yellow orange triangle with a yellow orange square, rectangle rather, and it's basically somewhere between $60-ish to like $70-ish dollars. And this is where we held support since 2021. We repeatedly have come down to that area, and so far have been rejected every time. So that area around $60 to $70 have been very difficult to pierce to the downside. For various reasons. There are supply disruptions. There is demand because of the booming economy worldwide. However, right now, for example, China is slowing down for sure. They have more electric cars. Do they need as much gasoline? No, probably not. maybe that's, we're gonna finally pierce that like 60-ish, $61, $63 area and continue lower. This would put great pressure on, for example, Russia, because they get lots of their revenue from oil. So let's see where this goes. Right now, again, oil is in a downtrend, so if you have a short position, I would hold it for now. If I have no positions, I would wait until we get a bounce. We're already getting some sort of a bounce. We're currently at the yellow line, so I'm not making it up, but right there we're touching the yellow line, and today we had rejected. So, but if I was trading oil, I would wait until a more meaningful bounce, like towards this red line. So if I was trading oil right now, I would wait for a bounce of about 10% towards $76 and potentially sell it short there, should it even get there. And we're looking somewhere in the mid-October kind of area for that bounce to materialize or not. So that's a state of current events. If you found this video useful, please hit the like button, make a comment. Like I said, if you have any opinion about where any of the securities are going, make a comment. If you have any questions, also ask a question in the question area. Other than that, head over to MasterChartsTrading.com, click on sign up, and sign up for one of the products. So again, the trading indicators are these lines on the chart. They are available for TradingView.com. Once you sign up on my site, I will open the door for you on TradingView.com. TradingView.com is free interface, so you just need a free TradingView account. Once you do, send me your ID. I'll open the door for you. You can see, and you'll be able to see my indicators on your site. So that's trading indicators, newsletters. I send daily alerts about various securities we trade. So notice we have quite a bit of securities to cover this week. And I also send out a weekly members-only video on various securities that we traded during the week. And of course, the best deal is to get both trading indicators and newsletters as a package deal. Of course, the best deal is to get both indicators and newsletters for the yearly price of $599.95 per year, which translates to about $49.95 per month. You can also get the same deal, or you can also get the same indicators and newsletters, and both at monthly prices. They're slightly more expensive. All of my plans come with a free 7-day trial. Cancel within 7 days, your card will not be charged. All right, thank you again for watching all the way till the end. Make a comment, like this video, share this video, and until next week, thank you for watching. Have another great trading week. Bye bye.